And you talk about Dallas, Houston. I understand that much of Texas avoided the housing bubble and the subsequent crash due to the fact that they had seen what occurred, during the S&L crisis. It hit Texas very hard. They did not swallow the toxic debt as much as the rest of the nation.
Yeah, but they were also based on stronger economics. The states my wife and I invest in are Oklahoma and Texas. Why? Oil. China used to export oil until 1993. Now they're importing oil. U.S. is importing from like 41 countries. Why is there a war going on in Africa? All the pirates and all that? Oil. Just look at, people, it's not red, white, and blue. It's oil.
And black gold. Exactly.
It's really simple.
But I wonder what you think about the yellow metal. You've had a price forecast here of as high as the 1100s, and we hit 1225 already on the yellow metal. Do you think we could continue higher this year?
The one I'm watching is more silver than anything else. Silver right now, the ratio, the gold-silver ratio is about 1 to 60.
Yeah.
I think approximately. And today there's more gold than silver on planet Earth. And so that's why I write for the average person. People are crying the blues about the economy. I said, just open your eyes up. Silver, you can buy a silver eagle for $20. That's what, 2 cappuccinos.
At Starbucks.
I see lots of opportunity, and other people see doom and gloom. And that's really my forecast. I'm guessing like everybody else. But I'm also basing it on fundamentals because silver is used in industry. Gold isn't.
Are you looking at that ratio that shows the real price of silver? We went back to the 1980s peak. Of course, now in inflation-adjusted terms, we'd be approaching $100 to $120 an ounce.
I'm an entrepreneur. I want to know the cost of my raw goods. So silver, like I said, silver is used in solar energy, computers, cell phones, medicine, anything electronic, silver is used in. But gold isn't. So silver, the stockpiles of silver are so far below the stockpiles of gold. And as I said, silver is a monetary metal, but it's also an industrial metal, where gold is pure monetary. And so which would you rather? I'd rather have the industrial metal, and as people buy more silver to consume, and the stockpiles go down, then it's just inelastic. You know what I mean? As price goes up, price goes up.
It tends to pool, geologically speaking, near the surface of the Earth. So we tend to run through those mines much more quickly. So there's a lot of depletion there. Very few pure silver plays. Then as copper production starts to run into that energy component, that's going to, I think, hurt silver production since it tends to be such a byproduct of copper.
Yes, and then stuff I've read, I don't read much on it, but there is less silver in the Earth's surface than gold. Buy silver. Kind of logical. Or, when I buy a piece of real estate, does it make me money? Does it put money in my pocket every single month? If it doesn't, don't buy it.
There's a lot of conjecture, a lot of question marks. Residential real estate's going to hit rock bottom. We're looking for 2012, 2013. Does that sound reasonable to you?
When you ask about price, you're playing capital gain. I play cash flow. There's two things investors invest for: capital gains or cash flow. Capital gains are those guys who are hoping the price of the stock goes up, price of real estate goes up, or the guys who short the market. As a professional investor, I'm investing for cash flow. So during the real estate boom, I got pegged as one of these flippers. I don't flip property. I buy, and I want money every single month. I want that check every single month. The average guy, the punter, the average person is investing for capital gains. So they're hoping the price of their real estate goes up, the stock goes up, or the price is going to go down. If the property makes sense and it produces income every single month, I'll buy it. It's not rocket science. So I make about $2 million a month.
But are you using your own funds or borrowed funds?
Never use your own money. That's the other myth that average person has, is debt is bad. Well, there's good debt and bad debt. The debt we're getting right now, we started off really small, my wife and I. I bought my first property before I met my wife with a credit card. But it was debt, $18,000 for a little one-bedroom condo. And I put it on a credit card. But it cash flowed. It paid my credit card off.
It's more difficult now, Robert, because, when prices are sliding, I mean, I'm sure there's opportunities for folks like you and who have been around and seen this. For the typical listener, it's kind of tricky. I mean, there's foreclosures everywhere. They think they're getting a bargain, but really there's another $10,000, $20,000, $30,000 worth of work and sweat equity, don't you think, in a lot of these places?
Well, that goes back to my whole thing. What do you learn at school? I have a college degree. It's a Bachelor of Science. Why don't you take a real estate course? 1973, I took a real estate course. Cost me $385. I was making $500 a month back then. But that gave me the fundamentals to be an investor. And since then, I've made probably $100 million off of that course. The average person is a gambler. They want to go out there and just buy, I don't care if it's a stock, a bond, or real estate. They want to buy, hold, and pray, or flip it. And when you flip something, then taxes kick in because you're now paying capital gains tax. There's a lack of education. So these people are saying that real estate is bad or I have an advantage. Yeah, I spent $385 for a real estate course. Today it's probably $5,000. But, what's it worth to you? Brain worth.
For instance, if you were starting out, you would want to see a property that could quickly move a renter in. By the end of the year, have a positive cash flow.
Yeah, John. Look, if it doesn't make money, why would you buy something?
The hope is future capital gains, right?
That's gambling. That's what Goldman Sachs is in trouble with right now, is they had one buyer going long and they had guys going short. And that's called a market. I don't really like that game. I want to buy control. I'm an entrepreneur. I'm not trying to say that I have thousands of employees, so I had to hire smart people. That's my secret. I take classes, I go to school, and I study. But I study what the average person doesn't study. I make more money than my attorneys and my accountants and my doctors. Look at the richest guys in the world. Bill Gates didn't finish school. Jobs didn't finish school. Dell didn't finish school. Walt Disney didn't finish school. Entrepreneur, that gives me the edge out there. Because I pay less in taxes, I make more money, and I'm not limited by country boundaries. I am all over the world. That's how I can sell 27 million copies. I think globally, I'm not a Phoenix guy, like most guys in Phoenix are. I also have oil wells, Texas, Oklahoma. I'm constantly on planes traveling the world. If you understand, I don't think like the average person. That's the difference between a rich dad and poor dad. My poor dad was an average, well-educated, hard-working, good man who paid excessive amounts of taxes in Social Security, and he was a member of the labor unions. This is not the way I think. I don't want a secure job. I don't want job security. I don't like mutual funds. I don't like stocks. I don't like 401ks. I just don't want to be average. When people ask me, what do you say to the average investor? I say, don't be average. You get killed. You've got to be smarter out there. People will steal your money. The biggest people stealing your money right now, the 401ks and the banks. When you look at the system, understand the system. What do you think this Goldman fraud suit is? Do you think it's a one-off event? It's going on constantly. If you're in the 401k, your money is being stolen by the very people you trust your money to. Putnam, Fidelity, all those guys. Come on, wake up. I'm not saying it's wrong. I'm saying those guys have to make a profit too. But not on my money. Average people, they'll just take their money.